there's probably fewer lenders by number that are offering real sort of development finance, if you like. There's the sort of bridging lenders who sort of creep into development finance, but for the real development finance, there's probably fewer by number. But I think generally for those that are active and operational in this part of the market, they have good support from internally and from their own funding lines, and I don't see that situation changing too much.
Thanks for that, Amit. Matthew, from a broker's perspective, would you agree that there are fewer development lenders in the space? How are you seeing the availability of funding change as a result of the pandemic?
I think initially I'd agree with Amit. With all the sort of political uncertainty prior to the pandemic settled with the Brexit agreement, etc., the first quarter of last year, people were walking around with smiles on their faces, expecting a good year. The coffers were full, lots of schemes to fund, etc. Once the pandemic hit, there was an initial shock, as expected, given the uncertainty around what will happen and how long it will last, and the inevitable pullback from some funding lines, from some lenders, and the lenders that did consistently support the industry. There was a slight pullback on the LTVs, and that's understandable given given the fact that we were in the unknown effectively. But I think from a holistic perspective, a lot of the pressures were put on the commercial market. So operating income driven assets were under pressure, and a lot of money allocation that was put to one side for that sector was then redirected into the residential development sector. So to answer your question in regards to the amount of lenders that are offering the development finance, I'd actually say it's more liquid and more prevalent than I've ever seen in the last decade. Amit's right, there are a few lenders that perhaps isn't their speciality, development finance, putting their hands up and saying, look, we'll support a scheme or two. But from a broker's perspective, the choice is massive nowadays. But again, it goes back to who will support it and delivery. From our perspective, we need to know which lenders can actually deliver on their promises. I think the redirection of the funds into the residential market from the commercial sector is an important factor in the fact that this liquidity is now so vast for us to choose to allocate our clients to. But overall, from a end user's perspective, strong government support with mortgages creates positive sentiment. As you say, I think you mentioned the mortgage guarantee scheme. Things like Sybil's has allowed lenders to manage the risk, de-risk some propositions, and hence lending has become slightly more liquid than it was 12 months ago, and we fully expect that to continue going forward. Of course, the reason I mention the mortgages is because the end user ultimately is the one where the exits are going to be facilitated, and although that's quite positive, we still don't know the full effects of furlough and redundancy. But as it stands, it's mainly positive. It's a very liquid sector, and yeah, I mean it's in pretty good shape. The other thing to point out, the pandemic has highlighted the abundance and power of tech. Although many industries suffered a continuation, I think our industry, once we got over the initial shock, it was a business as usual from last summer, and that consistency has stayed with us. And I think that's due to the advent of tech and the ability to be able to, go about our daily business with things like, a webinar, with what we're doing today. So the support of tech within the industry and the abundance of liquidity that wasn't allocated in the commercial sector has allowed residential development to be quite an attractive proposition to a lot of funding lines, and subsequently there's a lot of liquidity in the market at the moment.
Thanks for that. I mean, it's obviously really positive to hear, and you made some quite bold statements there about you'd never seen as much liquidity in the market as this. Alice, would you agree with that? Are you seeing that you're working with more development lenders now than you might have done a year ago?
Yeah, I think I'd again emphasize Matthew's point that it's one thing having an abundance of lenders in the market, having a large number of lenders in the market, but there are lenders out there that say they can do things and don't necessarily then follow through and deliver. So I'd say in a market where, yes, there are a large number of lenders saying that they can do a large number of things, specifically in development, finding those lenders that can offer something from the outset and deliver that when it comes to completion is something very, very different. And I would say that this is something that has come out far more over the last 12 months than prior to the last 12 months on the lenders that can deliver on their promises, can deliver on their assurances, versus the lenders that will say what they think will win them the deal, but then change the goalposts as they go through the application process. So I would say that, yes, I think the number of lenders lending on development finance has increased. There are a lot of bridges now kind of moving more into, albeit the smaller scale development when looking at ground up specifically. But the number of lenders in whom we have confidence to deliver on what they say they are going to do is probably unchanged.